one of the experts on not only mining history, but on all things mining. And he's a mineral economist. He's a noted keynote speaker and author. His name is Doug Silver. He's our featured presenter for the Global Mining Symposium Q3. Let me give you a bit of Doug's storied past and his great history and what he's done for this industry before he comes on and joins us. He began his career as an exploration geologist for Anaconda Minerals, which is one of the world's largest copper mining companies. But I'm going to accelerate us forward to 1987, where he started to really strut his entrepreneurial skills. He was a founding member of Bond International Gold, and that became one of the world's largest gold mining companies. It was actually the biggest IPO and on the New York Stock Exchange back in 1989. From there, he established his own private company, Balfour Holdings, where he acted as strategic advisor to global mining companies. And in 2003, he co-founded International Royalty Corporation, or is commonly known as IRC, that listed on the TSX. That was also the biggest IPO that year in 2005, raised over 190 million. And most of those funds went to purchase a royalty on the famed Voisey's Bay nickel project. It was actually the largest royalty transaction ever completed at the time. Doug might correct me, but in my mind, it was also the first one set up on a nickel, but I'm not 100% on that. And then in 2010, he sold IRC for roughly $750 million to Royal Gold. 2011, his storied career continues. He becomes a portfolio manager for Red Kite Management. It's a very important private equity firm, as those in the industry well know. He's responsible for sourcing, negotiating, and closing investments. Helped finance a lot of projects through Red Kite. And then that was spun out into Orion Resource Partners in 2013. Now, from 2013, 2020, Doug was one of the main guys at Orion. Again, Orion in the 13 to 20, that's a pretty tough market. And Orion was a key, critical source of financing for a lot of projects. I think there was roughly like 15 projects in Canada alone that received some financing from Orion. So he helped grow that into the world's largest mining private equity firm, managing roughly US $9 billion. He directly managed 1.1 billion. And then Orion sold that royalties, its portfolio that Doug managed, to Osisko Gold Royalties. And he retired from Orion December 2020. In 2018, Doug was inducted in the US National Mining Hall of Fame. He certainly is a Hall of Famer. He is also the founder of the Denver Gold Group, which is one of the most noted and prestigious mining conferences in the world. He founded that in 1989. Pretty illustrious career, Doug. Welcome to your first appearance on the Global Mining Symposium. How are you feeling today? And I always like to find out where people are joining us from. So how are you and where are you?
Well, thank you for inviting me. I'm at my ranch in Colorado, about 40 miles west of Denver. And I'm in my office enjoying a beautiful fall day and doing quick speeches so I can go out and play.
Excellent.
So what I'm going to do today is I have a presentation that I gave in June at the Invest in the North conference, and I've shortened it to give it to you today. And the reason for that is I love questions and answers. And we have an incredibly complicated world these days, which I get to spend 8 hours a day studying. Okay, 4 hours a day studying, 4 hours a day fishing. But I'd be happy to field any questions and have a dialogue with the audience, because I think it's very important. So Laura's going to be my slide turner. Thank you, Laura. I really appreciate it. And what I'm going to do today is I'm going to show you why Canada is the center of the mining universe. And if you want a copy of this presentation, ask Anthony or email me. This is a very data-rich study. It took about 7 or 8 months to put together. And there's a lot of numbers in here you've never seen before. So I want to share them and explain them to you. Next slide. Now, with all good studies, you have to have caveats. Now, if this was a public company presentation, these would be my legal weasel words. But from the perspective of this study, I'm only looking at public mineral companies. And I had to use a December 31st cutoff date because it takes months to do the analysis. And because there's so many projects and companies involved, it just takes a lot of time. All of my numbers are in US dollars unless otherwise specified, and that's because gold is designated in US dollars. And as you're going to see, gold plays a major role in the mining industry. I took a look at stock exchanges, and as you know, many companies have multiple listings. So I had to figure out a way to tag them to one listing. So what I did is wherever their home headquarters was located, the stock exchange that they were listed on in that country became their primary stock exchange. This allowed me to remove the cross listings and have the data being a lot tighter. And then finally, I'm going to talk about gold resources, and it's the sum of measured, indicated, and inferred resources. Now, I realize that the securities regulators don't want you combining these, but I'm talking about global endowment, and this is not an investment speech, so I could say whatever I want. Next slide. So why Canada? First of all, Canada is located in the Northern Hemisphere. Why is this important? Because the Northern Hemisphere represents 67% of the Earth's lands, accounts for 73% of the country and 87% of the global population. I personally think it's better to live on land than underwater. So being in a big area with a lot of land, and a lot of people is a good investment strategy. Canada also has a vast diversity of mineral endowment. It ranks in the top 20 countries for 37 out of 83 commodities that are tracked by the United States Geologic Survey. And it's truly a natural resource country, going well beyond mining. You know, you have fishing, you have agriculture, you have all sorts of different natural resource industries, timber. And about 8% of its GDP comes from mining versus only 2% in the US. Being next to the United States also helps. You know, the US may have the world's largest GDP, but we don't really have a natural resource culture here, and we depend on others to get our raw material. And Canada produces more than 50% of the US net imports for up to 18 different commodities. So Canada's sitting in the catbird seat. From a financial standpoint, there's a heck of a lot of money and a lot of investors just south of the border, and you provide us with a great service with the commodities you provide us. Next slide. So according to our host, the Northern Miner, and I have to give them a shout out, they went overboard giving me data. And Katja, thank you so much for all your help. But this is important because according to the Northern Miner, Canadian companies own more than 3,700 projects in Canada, with Quebec representing 940 of these projects. And as someone who's invested hundreds of millions of dollars in Quebec, this is no surprise, given how hard the Quebec government works at attracting mining investment. You can see that Ontario's in second place and British Columbia is in third, and then the other provinces and territories constitute a much smaller section. And the next slide shows you why. Again, this is something that Northern Miner provided me with. The yellow dots are projects in Canada, and you can see that there's three very big concentrations. There's the West Coast, which really stands out. You have the East Coast in Quebec and Newfoundland, and then you have Ontario. And what I find really interesting is that you have these three concentrations, but they're not all for the same commodity. They're for a variety of different deposit types and different commodities. And this is important because you don't want to be a mono commodity country. Next slide. So what I did is I took all these projects and I classified them by their major metal. And as you can see, gold represents over 50% of these projects. In second and third place are copper and silver, and then you can see the other commodities beyond that. Gold is by far the most popular, and you're going to see this time and time again in this speech, but I've got some interesting stats about gold and gold deposits. Next slide. The world has more than 1,400 gold deposits, representing almost 4 billion ounces. 329 of these reside in Canada for about 500 million ounces. Canadian companies, however, through either full or partial ownership, control 310 of these deposits for, again, about 500 million ounces. But globally, and this is what's really important, Canadian companies control 838 deposits for almost 2 billion ounces, or roughly 47% of the world's gold resources. When we look at the biggest deposits, say over 1 million ounces, because that's what investors tend to focus on, 95% of the world's gold is tied up in 625 deposits. 20% of these reside in Canada. And within Canada, 38% of its deposits contain more than 1 million ounces. And these ounces represent over 90% of the Canadian gold ounces. What's really interesting to me is when I started my career in the late Cretaceous, million ounce deposits were exceptionally rare. Well, so was the gold price. It was at 35 bucks an ounce. I mean, because the gold price is so high now, people can lower the cutoff and it exponentially grows these deposits. But million ounce deposit, there's an awful lot of them in Canada. So many players and so many deposits to choose from. If you're an investor, it's a veritable smorgasbord of opportunity. Next slide. Now, you're all familiar with the Fraser Institute. As far as I can tell, they're the only group that does an annual survey looking at attractiveness indexes around the world. And Canada provinces hold 5 of the 16 most popular places to invest. And if you go out a little further, Newfoundland is number 21. Very, very strong representation in the attractiveness. And this goes again back to the regulatory regime, to the infrastructure, to the culture of Canada. And it explains why it always ranks very highly. Next slide. Statistica put out a report in 2021 that shows that Canada is spending over $800 million a year in exploration. That's more than any other country by a long shot. Look at Australia, they're at 500 million, a little over 500 million. So the question is, why is this? And again, it goes to the endowment and it goes to the ability to raise money in Canada, which I'll discuss in a minute. Next slide. Globally, now let's go from Canada to globally and talk about the Canadian companies. Globally, Canadian mineral companies own more than 6,100 projects in 97 countries. Again, this comes out of the Northern Miner database, which is a superb data set, by the way. The vast majority of these deposits are located in North America. And by North America, I mean Canada, US, and Mexico, with Latin America being in a distant second place. But there's much more to this story than just the number of projects. As leaders in creating global mining standards, when Canadian companies operate in foreign jurisdictions, they also take these standards with them and share them. And this elevates the world in mining practices, which, as you know, with the current emphasis on ESG is very, very important. And the reason I bring this up is I find in a lot of the speeches I hear, particularly about Canadian mining, it's seldom emphasized. But for those of you who interact with groups like the Ontario Securities Commission, you know how hard they work at finding rational solutions and disclosure rules. They're currently updating 43-101, which has turned out to be a wonderful document for investors and companies alike. And I really think Canada decides a lot better creds on this issue, that they're personally carrying global international standards to the rest of the world. Next slide. So then what I did is I took a look at these projects and what stage they're at. And roughly half of the projects are at the prospecting stage. But the other 50% have a defined resource and are usually at some level of engineering or, luckily, if they're lucky, in production. This is great because it means whatever the investor is looking for, they have the full gambit with these Canadian projects and these Canadian companies. Next slide. Now, this slide is really interesting for me. I was kind of surprised when they put it together. The data comes from ENMJ, who annually tally capital spending. And what you see immediately looking at these bars is the massive role that Canadian companies play in global mining. They overshadow all the other nationalities when it comes to capital spending. And this capital, of course, leads to jobs, tax revenues, sharing of expertise and culture, and a major role in building new mines. So where does all this money come from? And this is where things get complicated. Next slide, please. In 2018, because I don't have a life, I reviewed 257 stock exchanges around the world in search of their mineral and mining companies. I then boiled it down to those exchanges that collectively represent 80% of the global market capitalization. Everybody remembers the old 80-20 rule? It really does apply. And because I don't speak Greek and I don't speak Russian, I was really glad to be able to work in languages I actually can read. What happens is when you do this, it boils down to 5 countries. Canada has 5 exchanges. I'm sure you're familiar with all of them. Australia has 1. The United Kingdom has 3, and the United States has at least 7. God only knows how many stock exchanges are on the OTC. It seems like every week there's a new one. And then I included South Africa, which has 1 stock exchange, because South Africa is such a major player in production and in geology. Going forward, I'm going to refer to these countries' exchanges, but I'm going to usually label them by the country name rather than having to read each one off again. Next slide. So most of the Canadian exchanges are owned by the TMX Group. And what I find interesting and powerful is that it serves as a graduating platform for companies as they grow. No other stock exchange really does this, or no other stock exchange company really does this. Canadian mineral companies account for 59% of this total data set. And in second place is Australia. The remaining exchanges have very few companies, but they have a lot of market cap because they cater to the world's largest companies. Canada, however, is the home of 9 of the 15 largest public mineral companies. Next slide. So then what I did is I broke it down looking by stock exchange and the distribution of companies. And what you see is that the TSXV hosts 39% of the total company count, followed by Australia ASX exchange with 28%. 90% of the companies are listed on one of the top 5 exchanges, of which 3 of these exchanges are Canadian, and I have them highlighted in yellow. So for those investors looking for a good investment, I mean, there's easily a 10-bagger in here. You just gotta kind of sort through which of the thousands of companies it's in. Next slide. So then I took the same database and I sorted it by market cap. And as you can see, the New York Stock Exchange ranks #1, but the TSX is #2. And more than 92% of the mining industry's market capitalizations are listed in one of the top 5 exchanges. So let's go to the next slide where I can show you a further breakdown. So what I did is I sorted and ranked each company by their primary commodity focus. As you know, let's just take gold, for example. There's gold companies that have copper projects, but they sell themselves as a gold company. If you look at their assets, they're principally gold. So I went through all of the companies. There's, roughly 2,400 of them, and I sorted them by their primary commodity focus. And as you can see, gold, copper, and silver are the most popular, followed by nickel, lithium, zinc, and uranium, if we only look at the top 10 commodities. And then, because everybody's talking about green metals these days, which is an interesting word, I highlighted the metals that were considered green, because again, investors are looking for green metals. And as you can see, there's 331 Canadian companies that are chasing these green metals. Australia also has strong representation with 232 companies, and the other exchanges only have token amounts. Now, I'm not going to spend a lot of time on the green commodities, but the only reason copper is a green commodity is because when it oxidizes, it turns green. Next slide. So I took the same data set and I sorted it by market cap. And we see that on the basis of market cap, the 3 biggest metals are gold, iron, and copper. And if you look at this slide, the collective market capitalization of these top 10 commodities is listed at the bottom. So then, next slide, I finally classified them by, I went through each company and said, what is their most advanced project stage? And the Canadian exchanges outnumber all the other exchanges in just about every category. But we do need to recognize the Australians here. They surpass the Canadian in feasibility and development stage projects, but most of their projects are located in Australia, where Canadian companies are globally distributed. And then I'd like to finish with some final shout outs. I need to start by acknowledging, obviously, the Northern Miner for providing me the data and providing a great newspaper and data sets for 500 years or something. The TMX Group and the OSC also need to be acknowledged. In the corporate world, money is the food that allows companies to operate and grow. And having had the privilege of interacting with both of these groups, I can say with great conviction that their corporate cultures are one of helping and not hindering. Their rules have been tested by time and make sense. And I can't say that about some of the other exchanges, particularly ones near my home. And look at the results. This graph here shows that the TSX plus the TSXV have grown more than 160% in cumulative listed market capitalization over roughly the last 10 years. And this is despite downturns, pandemics, and the Nordiques, excuse me, I mean the Colorado Avalanche winning the Stanley Cup. Next slide. And this goes even further. I mean, the TSX and the TSXV complete more than 1,300 financings each year for mineral companies. And this leads to literally billions of dollars in capital raised, which is what we need to go and discover, develop, and operate mines. Now, for those of you who don't know me, I come from the royalty world. And so I can't help myself but include a royalty slide. And the royalty companies have stepped up. Let's go back. In 2009, when we had the Grand Recession, a lot of the traditional mining banks pulled out, and they left this big gap for financing. And that gap has now been filled by the private equity firms, which, as Anthony said, I spent the last decade working with, and with the royalty and streaming companies. And I wanted to bring this up because they're a very powerful force in mine finance. And as shown in this graph, there's currently 36 public mineral royalty companies, of which 26 are Canadian. And if we just look at Franco-Nevada and Wheaton Precious Metals, together, they represent more than 60% of the industry by market cap. And if you throw in the American company, Royal Gold, you're now at 80% of the industry value. We have a lot of small up and coming people. They're fun to watch. And all of these companies are looking to provide financing. So there's my shameless plug for the royalty industry. So finally, you've decided you're going to go on the hunt for a next project, for your next investment. So you stretch your legs and you get on a plane and you said, well, where am I going to go? Well, Vancouver, Perth, and Toronto host more mineral companies than any other city in the world. So you actually don't have to go very far to cover a lot of ground. And distant fourth and fifth place are London and Sydney, and Montreal is in sixth place. And you'll notice that I'm looking here, and Denver is number 11. I know most people only use the top 10, but I had to sneak in my home turf, at least in one slide. Concluding, next slide, please. So let me sum this up for you. You know, you have everything you need to invest in mining in Canada. You have a strong natural resource culture, thousands of projects in Canada, and even more globally that are owned by Canadian companies. You have an excellent investing infrastructure between the regulators, the financiers, the lawyers, the accountants, and everybody else. On top of that, you also have probably more expertise in exploration, engineering, metallurgy, and even drilling companies than anywhere else in the world. And this brings it all together and explains why Canada has become the center of the universe. So why wouldn't you invest here? Thank you.
Excellent stuff, Doug. Excellent stuff. And I think too, within that context, for all of our delegates, and we have many CEOs of juniors that are tuning in and watching this, I mean, I think it's a thank you for putting all this together. We kind of have this feeling of Canada's dominance in the industry, but when you have those hard metrics there, and especially given the need, as I talked about at the onset of the show, that we need to find greater supply. We need to find new deposits, which means we got to bring in more capital. We got to speak to a wider audience. So increasingly going forward, I think we're going to be speaking to investors that maybe don't know this industry, don't know the importance of Canada within this. So a presentation like this, I think, can help a lot of executives better articulate their story to an international investment audience as well, if they are Canadian headquartered, and what Canada means and why so much of that expertise is coming out of here. So just fantastic. I would, a few things, questions are coming in already, so that's great. Keep the questions coming. This is what Global Mining Symposium is all about, unlike any other virtual symposium. It's fully live, so you get to fire off your questions. Take advantage of that. We have some good ones coming in, but I have the microphone, so I'm going to go first. I guess a big one would be, Doug, threats like you've laid out, it's actually more, Canada's importance and dominance is even actually more than I thought. Even though we sit on top of this data, I haven't gone through it the way you have. And you and Katja Freitag is going to be on the show today as well. So glad you gave her a shout out. And thank you, Katja, for helping Doug pull all this together. But what do you see as some of the threats? I mean, I guess Australia, in some ways, you pointed to it on feasibility and permitting, development and fees. I think they're slightly ahead. What are threats? How does Canada maintain this kind of position, and what could go wrong?
Well, you know, I think the threats that you're going to see are going to be external. As you know, ESG has taken off as a big subject. I think the biggest threat to Canadian mining is the internet, because what it allows is people that are anti-mining have an easier way to get together and fundraise. And so you're seeing a lot more opposition to mining. I'm currently doing a study for myself looking at why so many projects are being posed these days. What are the root causes for the opposition? Because if we know that, then we can engineer around it. I think that's one of the problems. This transition to, you know, the EV world or the electrification of the world is a bit of a joke because, yeah, it sounds like a great idea, but there's simply not enough deposits in the world, and permitting is taking longer and longer to put them into production. That's right. That the governments are going to have to decide whether they want to serve the people and upgrade their infrastructure, or whether they want to simply sit on social issues and not have these privileges. And I think globally, the people are going to have to decide that, do you really need an iPhone 27, or is your iPhone 10 just fine? But all of the projections you see about the massive need for new metal, it's very, very true. And to go back to your comment about Ukraine, listen, before the pandemic, there was also projections of massive shortfalls in copper. You then had the pandemic where Peru shut down its entire mining industry, shutting all that copper off. And then you come out of it, and if you look at wars, typically in wars, the metal demand increases after the war because of all the metal used in the war. It's not usually during the war. So, yeah, okay, we're going to a bit of a recession right now. We come out of this recession. There's three major reasons, each one of which could escalate copper prices dramatically. And you got three at one. I mean, it's the perfect storm for high copper prices. Yeah. So I think the world has to decide what that balance is between what society needs to evolve and be more innovative, and how we get those metals. And I think that's what the big international debate is these days.
Perfectly put. While they are flooding in, very good, delegates. You're taking advantage of this unique platform that we bring you. So, all right, let's get into it. We got a lot. Let's start with Eric, because his was in first. Eric asked, on one of the first slides, Doug, you showed the distribution of metals based on primary metals per mine. Was that calculated by volume or by value of the primary metal?
First of all, it wasn't by mine. It was by project. So whatever the project broadcast itself as, I'm a gold project, I'm a nickel project. Okay. That's how I did it.
Okay. And it was by value though?
No, just by what the primary metal. Well, in theory, companies will report the metals at a mine by the principal metal. So if it's a gold, copper, silver mine, then gold is the primary metal. So I would have chosen gold. Not everybody follows that standard, but that's the general standard used at least in the geology world.
Great. From Dennis, is the Canadian Treasury's lack of gold bullion in the vault a result of high irony based upon the just presented Canadian mining culture being ignored? Or do you think the Canadian Treasury views Canadian land as an underground bullion bank vault? Very interesting question. That's Dennis.
That is a very interesting question. And I've learned decades ago not to get involved in politics. So I'm not going to address that. But yeah, I mean, the Canadian lands are a massive vault of gold. But your question is really asking about the role of gold as a currency or as a government asset as opposed to mining. So I'm gonna dodge that one.
Okay, we move on to Alex. Thank you very much for the great presentation. Are the Chinese and other countries' mining sectors underrepresented? What would be the Chinese share including other countries? That's a good question too. I mean, sometimes it's tougher to get data out of China. I guess I would just spin it. Do we have enough reliable data on what China is doing, and where do you think it fits into the global scheme of things?
Okay, thank you for that horrible question. First of all, I don't speak Chinese. Second of all, I have learned over the years not to trust Chinese data, particularly if it comes from the government. The nature of how people are promoted within the government naturally leads to embellishment. Yeah. I will say this, though. If we look at the Chinese internationally, they were on a tear 15 years ago, buying every big deposit in the world. They didn't care what they paid. And as an economist, we couldn't believe some of the outrageous premiums they were paying. They've gotten a lot smarter about that. Now, on top of that, the Chinese have another problem. They don't care about Western culture, and it's directly reflected in how they behave in foreign countries. And as a consequence, there's an increasing amount of pushback on Chinese because maybe there's been accusations of slavery in Africa. You look what's going on with Las Bambas. I mean, there's all sorts of problems with how the Chinese behave outside of China, which is creating a big pushback by the locals.
Yeah, we are seeing that for sure. The Belt and Road Initiative isn't steamrolling like it once was. Also, I referenced that Simon Hunt report off the top. Also coming out of that was reports out of Africa that also America and Canada and the Western world is getting tougher as well, saying to a lot of these countries, listen, if you're going to go with Chinese Belt and Road, then you're going to suffer some repercussions from us. We're not going to be a friendly business to you. You're not, they're not going to take it. The Western world can't take it lying down that China's going to capture all these critical metals in Africa. So there is a pushback on the geopolitical front as well, apparently. So super important issue from Sammy. Is the narrative about copper shortages with the electrification of the economy, is that realistic? Or do you think that supply will increase to balance out that supply demand?
No, I think that the governments of the world are absolutely ignorant on the whole subject of copper because, will the supply increase? It should, but take Resolution in Arizona or Rosemont in Arizona, where they're pushing 20 years since they started permitting. The governments can't have it both ways. They can't demand that we develop more copper mines and then not allow us to develop the copper mines. Right. So this supply delay will continue, and as long as the anti-mining forces have the microphone, they will continue to delay, stall, cheat, whatever it takes to prevent new mines from being built. And so then they won't have the copper, and then the world will have to adjust. And how do you adjust? There's only one way: fundamental economics. If the demand is higher than the supply, the price is going up. So what a wonderful time to be 40 years old and having a big career in the mining business. It's going to be fun.
Yeah, with a little pullback right now, so everything's on sale. I couldn't agree more. And we're getting it on. We did our talk show, our podcast host, Adrian Pocobelli, did a great segment on it with Stephen Stewart, a CEO here in Toronto, on this whole permitting. And it's coming up on more and more of our formats and our forums. And you hit upon it on my first question about the Australians. To me, the governments are talking out of two sides of their mouths right now. On one hand, they're saying, yes, we need more critical minerals. Yes, we got to catch the Chinese. But we're going to make it as hard as possible on anyone the permitting process has not been streamlined. It's an absolute disaster. So I think as an industry, we got to get really vocal about this, and we really got to make it a point. You can't have this hypocrisy embedded in policy right now, what we're doing. And it seems the Australians are getting a bit better. I know they just announced something around to try to streamline their permitting. Yeah. Is that fair? Or where does Canada, you mentioned America is probably even worse than Canada.
Oh yeah, America, we're a third world country when it comes to stuff like this. Listen, politicians always talk out of both sides of the mouth. You haven't learned that yet? Mr. Biden was saying, isn't it great that Canada's our partner? We get all of our metals from them and not have to build mines in the U.S. Yes, sir. That's called, environmental imperialism. Is that what America stands for? Well, apparently this week we do, and until somebody sees another way to get elected. So it is a big problem. And I'm going to take it a different way. I think the mining industry, and I know George is speaking later, and I heard him speak the other day. He's a fantastic speaker, by the way. I think the mining industry does a really poor job in explaining what it does. I think we need to quit having PowerPoints that show trucks and dirty pits and stuff like that, and start doing. George is going to probably talk about this, but talk about what we do for society. And if you want this in society, you need to have us, as opposed to us being the enemy. So Yeah, the governments will continue to flip-flop back and forth, and it's just going to take longer to put things into production, which means supply shortfall when everybody needs these new metals.
Yeah.
It's that simple.
Beautifully said. Beautifully said. All right, on to Jonathan. Jonathan, hello, Doug. I recently heard an Australian mining CEO, okay, this might be a little bit biased, say that Canadian companies only mine equity, only mine equity dollars, and never actually build any assets. Well, we know that's not true. But what are your thoughts? Is there any grain of truth in that?
Wait a minute. This is coming from an Australian company, which probably has what, 3 billion shares outstanding, and they're talking about mining equity? Seriously?
This is coming from Jonathan, who says he heard an Australian CEO.
Oh, he heard.
He's not saying it. Yes.
Listen, here's the problem. And I've built companies and I sit on boards of companies. You know, if you have a project that you're passionate about and you need to move it ahead technically and do all the right things, you need money. And unfortunately, I mean, like copper price is dropping right now, which is because of the recession, not because of supply demand balancing. You unfortunately have to raise money in a low market. And that's not mining equity. That's just trying to keep the lights on and do your good work. So I would disagree. And I think again, if it's coming from Australia, you know, why do you want to have 3 billion shares out where your stock can't even move a penny because you're just so over diluted? So I reject that argument.
Okay, great.
You win, John.
We have some internet, even people again further afield. Well, I guess India and Pakistan aren't as far away as Australia, but they're far away. So Amit from Pakistan, he wants to talk a little bit about Reko Diq, an incredible deposit that Barrick has a hand in. I guess he just wants your opinion here. Hello from Pakistan. With regards to Reko Diq, large copper gold deposit. He mentions the numbers here. I guess he just kind of wants your take. Is it feasible? I mean, Reko Diq's been plagued by a lot of relations between Barrick and the government. Do you follow that story at all? Do you think it has a chance of getting into production?
I follow it as much as you can. And here is my answer, which is it's a massive deposit that will create hundreds of jobs, will create massive tax revenues, should help the communities because the Canadian companies tend to be very progressive when it comes to helping out with schools and medical and making sure the local stakeholders have a say in how things are done and benefit from the mine being up and running. So setting all the political stuff aside, which appears to be working itself out, this would be a wonderful contribution to the Pakistan GDP and their economy.
Excellent. And then from neighboring Pakistan, Nitya is from India. He asks, India is a subcontinent. It's basically asking what it would take or why aren't Canadian companies investing within the mineral space in India? Why don't we see as much investment there?
Oh, that's simple. You know, when England pulled together India as a country and took all those principalities and created a centralized government, it's probably one of the greatest governmental feats in the history of building governments. At the same time, the worst thing about India is all of the principalities doing their own things and not working together. And the perception of corruption, the inability to get permits without paying bribes, all of that directly leads to why people won't invest in India. And I'm speaking from personal experience here. We were working on a project that was a placer in a river, and the forestry department wouldn't give us a permit. Go figure. But the process there is it's very difficult to get anything done in India because of the government. The government's both good and bad. And the bad side is it's hard to get anything done. So people are going to spend their money where you have a government that's supportive and will be efficient in getting permits issued and stuff like that. And India wouldn't rank in the top 20 countries.
Okay, great. And staying with your assessment on global jurisdictions, we have Miguel from Bolivia. He says, congratulations on the organization of the event. Thank you, Miguel, and the presentation. Canada's a great example of development in gold. But could you, oh, sorry, Laura or Jessica, please don't remove the questions as I'm reading them because it makes them move all around. So just leave them up, please. Congratulations. What about the investment in Bolivia and more broadly speaking, if you want to touch upon South America? Of course, Bolivia with Evo Morales, there was some appropriations there. Is Bolivia, we know it's got a lot of silver, it's got a high prospectivity. Is it a place you do business in?
So first of all, Latin America gets more capital investment than any other region in the world. So there's a massive interest in South America because the geology is spectacular and the mines are big, and that's what everybody wants. Bolivia's problem is quite simple. Well, you really have two issues. One is you don't have seaports, so it's hard to move concentrates. But your bigger problem is, of course, your politics. And what we watch as an outsider is we watch the way Colombia has turned itself from being a pariah of South America to being a place you can invest in. And Bolivia needs to do the same thing. And until you change your politics there, well, again, why would anybody invest? There's plenty of other jurisdictions where you don't have to worry about the issues that Bolivia does. And I'm encouraged because I think Colombia sets an excellent example for how you transform your economy from what it was, which was not very popular, to a place that people are now investing in.
Excellent. And I would draw our listeners' attention to the latest issue of the Northern Miner, cover story, great one by Henry Lazenby on what's going on in Chile. Chile kind of walked close to the precipice with some radical left-wing ideologies around there that could have sunk their mining industry. But thankfully, they've pulled back a little bit and cooler heads are prevailing. So read all about that latest one in the Northern Miner, because obviously Chile, up until the last couple of years, was another great example of when you do it right, how much mining can contribute to your economy go forward. And then we all got a bit of a shock there when it seemed some silly ideas were coming in, some non-economic ideas were coming in on how to run the mining industry there. So hopefully that's pulling back. Oh my God, there's so many here. Soon there'll be a change of, we'll stay in South America. Soon there'll be a change in government in Brazil. How does that affect investment in the mining sector, considering the huge noise around greenwashing?
Yeah, I mean, I've invested in Brazil multiple times, and lovely country, love caipirinhas. There's no question about that. Traditionally, Brazil's problem has been hyperinflation. And the governments there come and go. I mean, how many times are you going to have Lula as your president? The politics come and go, but it's still one of the greatest mineral endowments on the planet, and it's a massive land position that has been barely touched for exploration. And mining's been part of the culture for hundreds of years. So when you get your new president, if it's somebody different, there'll be adjustments. But I don't worry with Brazil nationalizing or anything like that. I think they really do appreciate foreign investment and make sure that they remain as an attractive place to invest.
Excellent. That's encouraging. We're going to sneak one more in here. We're up against the clock, but Peter, staying with our international theme, Peter is joining us from Tanzania. So we're getting people tuning in from all across the globe for this, Doug. He wants your view on investing in Tanzania.
First of all, thank you for staying up so late. Jeez, my family wouldn't even stay up that late for me. So Tanzania has had its ups and downs in the last couple of years, but I think it's sorting out its various issues. And if I rank all of the African countries, Tanzania would be one of the higher ones on my list. So I think that you just need to keep going. There is a lot of foreign investment in Tanzania, and the people that have been operating there, in general, they seem to be very happy with how they're treated and how they can get things done. So I think that Tanzania probably ranks as one of the higher African countries to consider.
Okay, excellent. I'm going to squeeze one more. We have so many, and I'm sorry I cannot get to them all. All right, because we do have we've opened the floodgates here, but this is a good one. Hi, Doug. Sorry if you've already touched on this, but I don't think you have. Did you see the announced $1.5 billion in infrastructure support for mining available to partner with Infrastructure Bank of Canada? Do you think that can move the needle in terms of getting projects past exploration and into production?
I unfortunately I have not seen that, but let me pivot on that, which is flow through financing. Yeah. What an amazing investment tool. We actually tried to get a group going in the U.S. to see if we could get a similar thing here, and it didn't work. But I think your exploration spending would be a half or less than what it is if you didn't have flow through. But I don't know about this development thing. Sorry, I can't respond.
Oh, that's all right. I'm glad I gave a chance to pivot to that, because that is a great underlining driver for the presentation that you gave, right?
Yeah.
In terms of why is it that way? Flow through has to be a big part of that.
I should have put that on that slide that showed the exploration spending. Me bad.
It's hard to find any criticism of that presentation, Doug. Amazing, amazing job. We thank you so much for taking the time and sharing your expertise. We hope maybe you'll consider coming back again, maybe next year. It'd be nice to have this as a semi-regular. I'm going to put you on the spot because I can tell by our audience, that's a record amount of questions we had. We had over 15 questions. We couldn't even get to them all. So thank you very much. The delegates appreciate it. We appreciate it.
Why don't you have me back, but don't have me speak, just do a Q&A, because I find Q&A is the most interesting because everybody has things they're thinking about, and I like the challenge. So thank you for inviting me. Katja, thank you. Bye.
Excellent stuff. And Doug, you're one of the few people that could do an open forum like that. There's not many people in our industry that can handle that.
Yeah.
I might take you up on that.
It'd be fun.
Awesome. Thank you so much, Doug. Enjoy the rest of your day in Colorado. Take care.
Will do. Bye.
Ciao, ciao.